Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Investors get set for a bumper week of earnings and US economic data. Bitcoin tops 71,000 as traders ramp up bets on a Donald Trump comeback. HSBC's $3 billion buyback. Europe's biggest bank throws down the gauntlet with a beat on pre-tax profits and revenues. Spain's Santander also beats on net income. Plus, Goldman Sachs CEO on his concerns about conflict in the Middle East. We're going to bring you our exclusive conversation with David Solomon at the Future Investment Initiative in Saudi Arabia. Breaking some earnings for you right now on a massive week for the earnings story. Novartis up front right now. Third quarter core earnings per share coming in with a beat. It's a beat for the Swiss drug maker. $2.06 in terms of earnings per share in the third quarter. That was above the estimates of $1.94. In terms of the third quarter net sales, they came in slightly above the estimates as well. Also a beat in terms of third quarter net sales for Novartis, $12.82 billion US dollars. The estimates had been for $12.68 billion. They have also raised their full year outlook. Analysts had expected that maybe this was an option for Novartis, and that is the key line. Novartis raising its full year outlook. We know as well there's going to be details expected in terms of a push of one of their cancer drugs in the US. We're going to be speaking, by the way, to the CEO of Novartis in about 2 hours' time on the opening trade. That stock, as you can see, up around 22% year to date. A beat for Novartis. Lufthansa, the airline, down about 10% year to date. The focus, of course, on the restructuring plan, on fare prices and on demand for this German airline. Third quarter adjusted earnings coming in above the estimates. It's a beat in terms of the EBIT for Lufthansa in the third quarter, 1.34 billion euros. The estimates have been for below 1.3 billion. Lufthansa also confirming its guidance, says it sees strong demand through the year end. So that is a stock to watch at the open. The stock down again year to date around 10%. In terms of the markets, let's flip over and look more broadly what's happening, because these markets are desperate for some kind of catalyst. Will the earnings story be it? Up later today is the Alphabet story, of course, with the focus on cloud, the focus on monetization around AI. The stock, of course, has rallied year to date. To what extent will that be a catalyst, or will markets still hold out for details in terms of the data story out of the US and then maybe some clarity in terms of US politics? European futures currently pointing to gains of 0.1% after modest upside yesterday. US futures pointing flat currently. S&P futures, Nasdaq futures just modestly in positive territory, looking to add 13 points. Here in the UK, the FTSE 100 trading at 80,329, looking to add just 9 points so far in the session. Let's flip the board and look cross-asset. There were very modest gains again across the S&P and Nasdaq yesterday. Cross-asset, continued focus, of course, on the Treasury market. We're expecting more details out of the Treasury Department in terms of the auctions on Wednesday. The US 10-year currently trading at 4.27. Yields down 1 basis point, 4.27 on your benchmark. Euro-dollar at 1.08 as Luis de Guindos, the VP of the ECB, says the disinflationary progress is definitely there, but there are risks as well. Euro-dollar at 1.08. Brent, after the biggest drop in more than 2 years yesterday, stabilising right now, $71.44 per barrel, and 71,000, above 71,000 on Bitcoin. And this is certainly part of the Trump trade, up 2% so far in the session. The cryptocurrency with the largest market cap in the world. Let's cross over right now to Singapore. Avril Hong standing by for a check on the Asian markets. Avril.
Yeah, Tom, Asia looking pretty mixed. What's really interesting is how for a second day, in spite of the political uncertainty in Japan, stocks in the country have closed higher for another session. And today it's being boosted by the banks, the insurers. They tend to do well in a higher US yield environment. But if you take a look at what we're seeing in the rest of the region, it is looking pretty negative. You have big US as well as Asia earnings this week, US data ahead of the Fed next week, and of course the US election. So China, South Korea, Taiwan, among the markets that are treading water today, helping the Hang Seng to keep its head in the positive territory is the likes of HSBC. It's a big boost to the benchmark today after it announced its profit beat as well as that share buyback plan, and it's surging 3+% now. And let's take a closer look at what we're seeing in the Japanese currency as well, because that is where we're seeing the recouping of the steep losses from a day ago, moving even further away from the 143.8 level. Some of this due to safe haven demand. There is an element of that ahead of the US election. We also had data showing jobs to applicant ratio rising, suggesting a tightening labor market, and that makes the case for Japanese firms to hike wages. That's something that the BOJ, is a requirement for it to tighten monetary policy. But keep this in mind as well. Another element is how arguably the July rate hike was prompted by the yen weakness, and given where we're seeing the yen now, there is a sense that maybe traders aren't just writing off some hawkish guidance from Ueda-san later this week. Flip the board again. I wanted to talk through what we're seeing in Japanese stocks because we are in the early stages of the earnings season, and so far we have been seeing mostly downside surprises from Japanese firms, but the bunch of stocks that have been faring better in that regard, aggregate surprise of about 32% are the consumer discretionary stocks. And if you take a look at this chart, it shows you that in terms of their stock performance, they have been underperforming the topics, which suggests there is room for catch-up. And when that happens, it could be positive for the broader Japanese markets as well. Tom.
Avril Hong in Singapore. Thank you very much indeed. Avril touching, of course, on the story around HSBC shares, as she mentioned, higher in the Hong Kong session so far, currently up a little over 3%. That's after the lender announced a fresh multi-billion-dollar stock buyback, as it reported better than expected earnings. It comes a days, of course, after the company unveiled a major restructuring of its business under its new CEO. Thomas Nutzel, senior bank analyst from our Bloomberg intelligence team, joins us now for the analysis. Thomas, what stood out to you from these HSBC earnings?
Yes, good morning. So, yes, all in all, very positive results. PBT beat, CET1 well above the targeted level, new buyback share, $3 billion. But I think what is most interesting and what is something that analysts may be looking for is the momentum building up within the non-rate interest income. And that in context of declining interest rates, I think is relatively positive news and up nicely for 2025.
OK, what did we hear and what details did we get about the CEO's new restructuring plan? Significant, one of the biggest shake-ups at HSBC, maybe in over a decade by some estimates. Did we get more details on the path forward for this bank?
Yes, this is the details which we are very much looking for, but unfortunately this is not yet disclosed. We don't know apart from new divisions, we don't know anything about cost structure, we don't know what is the cost target, we don't know what are the detailed plan. This is going to be disclosed possibly with 4Q results in February. So it's definitely something that I think is a missing component. The restructuring was positively received by the market, but we need more details, right? There's a long promise, but there's a little bit short details. What exactly will happen? Where will we cut costs? What will be the new structure looking like? And that's something that we'll be possibly discussing during the 3Q earnings call today as well.
And Thomas, before we let you go, there were some interesting comments from the new CEO about the wealth part of the business. How important do you expect that unit to be in the future of HSBC? To what extent could that be a further profit driver for this bank?
Yeah, as I mentioned, what I think is most important, most positive is the momentum building within non-NII business. And it is largely driven by wealth business. And this is going to be a key profit driver. It's going to be very important for the revenue generation 2025 and 2026, especially that we're going to see interest rates going down and putting pressure on the margin. So yes, I believe that part of the new restructuring could be as well pushing more for wealth growth, better asset money inflows, and that will be definitely the major growth and revenue driver from 2025 onwards.
OK, Thomas Netzel, thank you very much indeed. Senior bank analyst from our Bloomberg intelligence team. Maybe wait for more details in terms of that restructuring plan in the fourth quarter. But a beat again in terms of the top line for HSBC, with the shares up in Hong Kong, currently 3.4%. Staying on the banking story, and it's another beat, this time from Santander. Top lines coming through in terms of the news on Santander. Beating in terms of the profit estimates, the lending income has held up. The bank posting net income of 3.25 billion euros. That was above the estimates. Interest income gaining 8%. Fee growth also coming in at 5%. That's growth of 5% in terms of the fee growth. The stock, by the way, Santander, currently up around 25% year to date. Net interest income coming in slightly below the estimates in the third quarter, 11.23 billion euros. The estimates had been for just shy of 11.6 billion euros. But again, in terms of net income, it was a beat for Santander, recording 3.25 billion euros. The estimates had been for just below 3.2 billion euros. So top line, the redhead, a beat from that big Spanish lender in the third quarter. We're going to be speaking with the Santander CFO in about an hour's time on the opening trade. So stay tuned for that interview. And still on the banking space, Goldman Sachs CEO David Solomon remains bullish on the US economy, predicting a soft landing and expecting deal-making activity to continue. He spoke to us exclusively on the sidelines of the Saudi Future Investment Initiative in Riyadh.
I think there's an awful lot of attention on short-term rates. I'd actually be focused over time on longer-term rates. And, I continue to be concerned about the level of spending and deficits in the United States. I don't think that's a short-term, crisis factor. But unless we have policy change and get our spending and our debt under control, ultimately that's going to have a bigger impact on long-term rates than I think people are anticipating today.
Goldman Sachs CEO David Solomon speaking to us exclusively in Riyadh. Now, plenty of US economic data to look forward to this week as he talks about the US economy, starting with the JOLTS numbers, the job opening numbers today, leading up to non-farm payrolls, of course, the drum roll, leading up to that data print on Friday. Let's bring Valerie Teitel to take us through what markets are bracing for, maybe more volatility around the data, and what to expect from the US Treasury as well, Valerie.
Exactly, Tom. Big week for US data. And when it comes to the labor market, we're looking for any hints at that recent tightening we saw last month. Is it just a blip or is it a start of a new trend? You can see that here in my chart. This is job openings per unemployed worker. It saw a rise in last month's data, and Bloomberg Economics predicts that we could see another rise again, but they don't think it will be sustained. They think this recent tightening is just a blip and we'll go back to seeing easing in the labor market. So not only do we have to worry about labor market data, but Tom, it's also month end this week, on Thursday to be exact. If you flip over to my next chart, I want to talk a little about what Goldman is warning about. They're warning we could see another funding squeeze, just like we saw at the end of last month. And they point to the fact that because of the risk events on the horizon, the election and the Fed meeting, the auction treasury schedule has been compressed. So month end is on Thursday, and actually on that date, we are going to see the largest treasury auction settlement date that we've ever had. Some $530 billion of treasury settlements is expected to take place on that day, on month end. And Goldman thinks that we could see another funding squeeze on that date as banks and investors really scramble for cash on their balance sheet. Another thing I want you to keep in mind, Tom, is what we're seeing recently in gold and Bitcoin. So we saw a big jump in Bitcoin overnight. It jumped near 2%. It's up, 2.25% now. Now, this is happening in tandem with gold rising, which to markets, that leads us to conclude that this is maybe about deficit worries. We heard from the CEO of Goldman Sachs there on his worry about the climbing U.S. deficit. The expectation of a Trump win being priced into Bitcoin is also being shown in the price of gold as we start to worry about the climbing U.S. fiscal deficit.
OK, Valerie Teitel, loving the live reaction to the price around Bitcoin. Thank you very much indeed, breaking down what to look for this week, leading up, of course, to JOLTS data later today, and then non-farm payrolls, of course, on Friday, the Treasury in focus, and the move around the Trump trade on Bitcoin. Let's focus on what else is coming through for you today. 9:30 a.m. UK time. UK mortgage approval, so touch there on the health of the housing market here in the UK as the Bank of England gradually, slowly pushes rates lower. At 2 p.m. UK time, it is the US JOLTS data, so job openings, that will be important. We know the Fed has an eye on that. And then on the earnings fronts, it's the big one when we kick off Mag 7 earnings with Alphabet crossing later today. And of course, the team will be breaking those earnings for you. The stock up about 22% year to date, and a focus on, I should say 20% year to date, a focus on the cloud division, of course, at Alphabet. Coming up, we will switch focus because the Israeli Prime Minister says he is open to a short truce in Gaza, in what would be the first ceasefire deal with Hamas in nearly a year. we bring you the details. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Israeli Prime Minister Benjamin Netanyahu says he is open to a short truce in the country's war with Hamas that would lead to the release of a small number of hostages still held by the Iran-backed militant group in Gaza. Let's bring in Bloomberg's Paul Wallace in Dubai. Paul, does this suggest that a truce in Gaza, even if it is short, is getting closer?
Hi, Tom. In some ways, there's certainly been progress because the Gaza truce talks have been stalled for a long time now. I mean, take your pick, 2 or 3 months or even longer, depending on how you define it. They've gone absolutely nowhere in that time frame. So the fact that negotiators are back in Qatar talking about how to get a deal over the line is certainly progress of sorts. Egypt is proposing a 48-hour truce initially for the release of 4 hostages and the release of some Palestinian prisoners from Israeli jails. There are 101 hostages remaining in Gaza. Many of those, perhaps 30 or 40, are thought by Israeli intelligence officials to be dead. But there are still many obstacles to overcome, and Israel has said that it's not actually received a formal proposal for this 2-day truce in return for 4 hostages being released. So I think there's still a lot of things to overcome. One of them is just the negotiating stance and position of Hamas at the moment, given that its leader Yahya Sinwar was killed in Gaza only this month, and Israel, as well as other negotiators, including Qatar, are still unclear just what Hamas's stance is at the moment, whether it's changed since the death of Sinwar, or whether anyone is really in charge of the group, and whether there's easy contact between its political members in Qatar and those still on the ground in Gaza. So there's still lots of questions. I don't think we are going to get anything imminent, not this week. It doesn't seem like that anyway.
OK, maybe not imminent, but we'll watch to see how and to what extent some of those questions are answered and whether or not there is progress towards that deal, even if it is a short truce. Meanwhile, Israel's parliament then, Paul, passing a bill to restrict the main UN organisation that supports Palestinians. How big an impact will this have? We know that domestically in Israel there's been a lot of opposition to this UN arm. What has the response been so far?
Hi, Tom. I think this definitely is a significant moment. So what this bill does, it effectively bans the UN Relief and Works Agency, or UNRWA, from operating in Israel. It can still work in the Palestinian territories in Gaza and the West Bank, but that's very difficult for it to do if it can't use logistics facilities, warehouses, and so on in Israel. It's meant to take effect within 90 days, so there is room for negotiations before then. But I think it really underscores the divide between Israel and the rest of the world when it comes to the humanitarian situation in Gaza. Israel and its population, not just its politicians, are really focused on what remains of Hamas as a military threat and the hostages themselves. The rest of the world is to a large extent focused on the plight of civilians there. The US only recently said to Israel that it needs to do more to get aid into Gaza to help stricken civilians by next month. And if that doesn't happen, then it may well, Washington may well introduce restrictions on the military aid it gives Israel. This bill in the Knesset, or Israeli parliament, late yesterday kind of flies in the face of that, and it almost in some ways shows how defiant Israel is. Israel is adamant that UNRWA is effectively a security threat. It says that many of its members are involved with Hamas, and has said that some of them were involved in the October 7th, 2003 attack, something that UNRWA herself has admitted took place in some cases. But I think it's certainly something that is just going to lead to a lot of criticism on Israel and potentially some kind of reaction, material reaction from its allies in Europe.
Okay, Paul Wallace with the details and the latest out of the Middle East. Thank you very much indeed. Turning to the invasion of Ukraine now, and Russian troops have reportedly captured the last town before Pokrovsk, which is a key logistics hub for Ukrainian forces in the east of the country. The fall of that city could jeopardize Ukraine's defensive line and pave the way for Russia to occupy the entirety of the Donetsk region, which is a key goal for Moscow. Coming up, Volkswagen unveils radical plans to cut costs. We will bring you the details and the challenges facing Germany's biggest automaker. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, after a profit warning and years of concerns, Volkswagen's management is presenting radical cuts at its namesake brand to remain competitive. At least that's the hope, at least, from executives. Let's bring in Bloomberg's Oliver Crook, who's been following all of this for us. Ollie, take us through what management is intending, what we heard yesterday, what we learned yesterday.
Yeah, and this is the sort of shock that dropped across employees that work across Volkswagen at 10, 11 sites yesterday, that they got this news for the very first time. And remember, this is for the VW brand. This is the brand that is competing with the Chinese automakers that are increasingly making their presence felt on the European continent. And so the question of profitability and margins comes to the fore here. What management wants to do is to close 3 factories within Germany, to cut 10% across the board wages for employees there. We're talking about, just to give you the scale here, Tom, 140,000 people within Germany. That's about half of Volkswagen's workforce in Germany. And of course, also potentially with factory closures would come job cuts. And this is the sort of big thing that is now hanging over this entire company and this entire industry. And we should say, Tom, that bears mentioning again, Volkswagen in its 90-year history has never before closed a factory. It is talking about closing 3 in Germany, 1 potentially in Belgium. And this is really the moment where we sort of talk about what is the effect of 2 years of PMI manufacturing contraction. It goes from the sort of charts into the reality. And this is what is facing a number of workers, potentially hundreds of thousands, if with just the pay cuts that are across Germany, and the sort of real economic impact there.
Yeah, and presumably, Ollie, the unions, with their strength, with that manpower, they're not going to take this lying down. What is the reaction? What is the expected reaction of unions to this news?
Yeah, absolutely, Tom. And this is really what we're going to begin to be tracking over the next few months. This is really the opening gambit for management. And what we are going to get now is going to be the responses from the unions. And by the way, their negotiations resume tomorrow, right? And this is when all these discussions are going to come out to the fore. The real concern here is that this is going to result in basically strikes, because obviously they are very far apart on a number of issues here. And so the question is, where can they sort of collectively get eventually? But I think, Tom, what is even more interesting here is this as not just a Volkswagen story, but as a test case. And the question is, Tom, how powerful is the union in Germany in the year 2024? I was just looking it up in the break here, that still in Germany, 24% of all employment is in manufacturing. You have to wonder how many of those jobs are being currently preserved by some of these union agreements. And if something falls here at Volkswagen, could there be much larger ramifications across the German industry?
Yeah, potentially a ripple effect then. 24% of people employed in the manufacturing industry in Germany. Bloomberg's Oliver Crook with a finger on the pulse of what's happening at VW and the broader ramifications of the travails of that automaker and how the unions could respond then. The prospects potentially of strikes, which of course would make the situation, at least in terms of the top line for VW, even more challenging. Ollie, thank you. Coming up later, a budget that will define UK politics for the rest of the decade. We're going to preview the Labour Party's awesome statement on Wednesday, expected to include tax hikes and extra borrowing. Stay with us. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Investors get set for a bumper week of earnings and US economic data. Bitcoin topping $71,000 as traders ramp up bets on a Donald Trump comeback. HSBC's $3 billion buyback. Europe's biggest bank throws down the gauntlet with a beat on pre-tax profits and revenues. Spain's Santander also beats on net income. Plus, Goldman Sachs CEO on his concerns about conflict in the Middle East and the US deficit. We're going to bring you our exclusive conversation with David Solomon at the Future Investment Initiative in Saudi Arabia. On the earnings story, lines breaking right now from the footwear maker based in Germany, Adidas. The stock, by the way, is up, 17% year to date. In terms of the top lines coming through from Adidas then, third quarter gross profit meets estimates, revenue coming in at 6.4 billion euros, operating profit just shy of 600 million euros in the third quarter, and a gross margin in the third quarter of 51.3%. Adidas confirming its guidance as reported on October the 15th. Of course, a touch point on the consumer, the inventory story as well, and the margin story. Again, gross margin 51.3% in the third quarter. Revenues of 6.4 billion in the third quarter. Operating profit of around 600 million euros, meeting, it seems, the estimates in terms of the third quarter for Adidas. The stock up around 17% year to date. Let's check in more broadly on these markets then. In the earnings story, and maybe some of these earnings stories will prove something of a catalyst for a market that has been lackluster. Very modest gains that we saw across the US and European session yesterday. But you've had beats from HSBC, from Novartis, from Santander, and those could prove some upside. European futures pointing to gains then of 0.1%. It's a slightly brighter picture, and I will put my finger on the positive earnings stories as a result of that. FTSE 100 futures now looking to gain 0.2%. S&P futures currently flat. Nasdaq futures looking to add just shy of 0.2%, with the focus on Alphabet earnings and particularly on the cloud division. Those earnings dropping later today. 4.26. Your 10-year is yielding you 4.26. Yields are down around 2 basis points so far on the session at the long end on the 10-year. Euro dollar at 108. We've heard from the Vice President of the ECB suggesting that the moves around disinflation are there, but there are risks potentially on the horizon. Brent, after a drop of around 6% yesterday, more than biggest drop in more than 2 years. Currently at 71.30, bit of stability in the oil price, currently down 0.2%. And Bitcoin, yeah, there it is, above $71,000. Part of the Trump trade basket, currently up 2% in the session. Let's get to the CEO of Goldman Sachs right now. David Solomon has expressed concern about the widening Middle East conflict, citing its potential impact on security, safety, and economic growth. He spoke to us exclusively on the sidelines of the Saudi Future Investment Initiative in Riyadh.
It's not good for security. It's not good for safety. It's not good for economic growth. And I'm hopeful that leaders both in the region and around the world and important governments around the world will be able to find a path to settle it down as we move forward. But, of course, anytime you have geopolitical uncertainty, that's not good for economic growth and prosperity. And one of the things I just noticed, I spend time with people here on the ground. People want to find a path to a secure, prosperous, economically vibrant Middle East.
Has it impacted business trading in the region?
You know, it's interesting. People are obviously concerned and very, very focused, but it's not had a significant impact on activity up to this point, on activity in this part of the region.
Yeah. Well, let's just talk more broadly. Your earnings came out very strong, surpassing expectations. Obviously, the stock has had a good run this year. You must be feeling good, but let me just ask you how you're feeling about the outlook in general.
I feel good about the outlook. I think, you know, if you took a tour around the world, the U.S. economy is actually doing quite well. It's been very, very resilient. I'm a little bit more concerned about European growth and also the economic situation in China. But overall, the engine of the U.S. has been quite powerful, and our business, while global, is quite correlated to U.S. growth. I can give you a list of things to worry about, but generally, I can tell you also a list of things that I'm quite optimistic about.
Yeah.
The progress around technology and AI and the opportunities to increase productivity are real. Progress that we're seeing around healthcare and medical technology are extraordinary in the impact that they'll have. So there are a lot of reasons to be optimistic about the growth and trajectory of economies around the world.
Yeah.
But there's also fragility and things can go wrong.
Well, I was going to pick up on that because it's been really difficult to sort of track the narrative around the U.S. economy the last few months? Because we've gone from hard landing to soft landing. Now people are talking about no landing. I'm not going to ask you for a descriptor of the U.S. economy, but what I will ask you is, where are some areas of concern that you're seeing right now?
Well, the base case in the U.S. is certainly at this point for a soft landing. That doesn't mean that at some point there can't be, some sort of a slowdown in economic growth. But what I would say is the U.S. economy is proving to be incredibly resilient. We do have an election in the U.S., and there'll be policy decisions that come out of that election. And so, certainly those will have an impact on the trajectory in 2025 and 2026. With respect to, European growth is more sluggish at the moment. And I'm concerned about the same things that many people I know are talking to you about at this event. Geopolitics, U.S.-China relationship, the situation in Ukraine, the situation we just touched on in the Middle East. Also concerned, broadly about inflation in the world, concerned about energy policy, which is obviously a significant issue. I'm concerned about immigration and migration, which is an issue in different parts of the world. So these are all issues that require leadership and policy direction. And I'm hopeful as we get past the election in the U.S. and we continue to move forward, we'll see a clear direction of travel on some of these significant policy issues.
And that, of course, was the Goldman Sachs chairman and CEO, David Solomon, speaking exclusively to Jumana Pasechi, who joins us now, Bloomberg's Middle East and Africa anchor on the ground for us in Riyadh, speaking to a number of executives, and most recently, of course, David Solomon, the CEO of Goldman Sachs. Jumana, what else stood out to you from this conversation with the head of Goldman Sachs? For me, the lines on the differentiation between US growth and Europe, his concerns about growth here stood out.
Yeah.
He had a nod, of course, to geopolitics. What for you was the kind of the key takeaway from this interview?
Yeah, so we actually ended up having like a 15-20-minute conversation, and it was really interesting to get his perspective on a broad array of topics. Beyond what we just listened to now, I think it is interesting to note that his major concerns from an economic perspective were vis-a-vis the European economy. He said that U.S. economy so far seems to be fine. He listed then a bunch of issues that he is actually concerned about, be they geo-economic fragmentation, tariffs, immigration. Certainly the U.S. election is a short-term risk that he cited. But when it comes to growth prospects, he did say that he is concerned about the trajectory of European growth, which tells you something as well about the potential for future deal-making. But over here in the region, we also had some exclusive news that came out. Earlier today, Goldman Sachs announced that they are going to be one of the first Wall Street banks to open up an office in the new financial district within Riyadh. They were also one of the first Wall Street banks to apply for the so-called RHQ license within Saudi Arabia. And Goldman have had a presence in the region for a really long time. But we started off the interview just talking about their commitment to the region. And what David Solomon was saying is that there's a lot of deal making going on here, a lot of activity. And one of the other stories that we've been tracking across Bloomberg News is this sort of pivot domestically. PIF, as you know, almost a $1 trillion sovereign wealth fund, has committed and mobilized a lot of capital to asset managers. But recently, just in the last 6 to 12 months, they've been asking to see where asset managers are investing funds domestically. They're asking some of those partners to be more involved in the Saudi Arabian market. And I put that question to David Solomon, and he said, look, it's just a matter of a maturing economy. And it was a matter of time before the PIF also wanted to see some of the capital being mobilized also back into the Saudi Arabian economy as well. So really broad discussion here. And generally, the takeaway that I got is obviously the bank is doing really well. He feels good about the outlook, some concerns about the European economy, and then reaffirming commitment to the region and to Saudi Arabia.
Yeah, it was a wide-ranging interview. Jumana, you are on the ground. You've been there for a couple of days now. What is the mood like in Riyadh? What are the other key kind of topics of conversation that are percolating through the halls of that huge room that you're in?
I wish I could show you, but there are queues extending hundreds of meters for people waiting to get into the plenary, which has just started now. The main speeches have just begun. The PIF governor, Yasser Al-Mayyan, is just delivering a speech now. And then a few major panels coming up with some of the biggest names in the industry going to be on stage, the likes of Jane Fraser, Larry Fink. We talk about some of the other bank CEOs as well. David Solomon is going to be there, Barclays CEO, alongside some of the other big VC names. And to that point, this year, the major theme actually is going to be one around tech and AI. And at 5 p.m. this afternoon, there's going to be a special conversation with Andreessen Horowitz. And there's a lot of mystery surrounding who he's going to be speaking with. We don't actually know, but it seems like it could be somebody quite big from the tech industry. So we're going to stay tuned for that. But it also ties into an announcement that the PIF made earlier this year that they're looking to set up a $40 billion fund alongside Andreessen Horowitz to invest in artificial intelligence. So we're looking for more details on that announcement and also possibly whoever this surprise mystery guest is going to be at 5 p.m. There's also some chatter that the Crown Prince himself, Mohammed bin Salman, will be attending the conference. So it explains some of the noise that you're hearing behind me right now, Tom.
Yeah, you've got me. That tease works in terms of the build-up to the surprise guest later today from that event. Jemana Pasechi, great work on the ground for us in Riyadh. Hopefully you can skip the queues as well with the special pass. Jemana, thank you very much indeed for the latest. Now we're going to have plenty more from the Future Investment Initiative annual conference, of course, including interviews with Khalid Al-Falih, Saudi Arabia's investment minister. So stay tuned for that conversation. Now, the Biden administration has finalised restrictions on US investments into advanced technology in China. The rules ban some investments into semiconductors, quantum computing and AI. The US government must be notified about deals in other industries. The policy aims to prevent US capital from helping China develop critical technologies that could give Beijing a military edge. And Bloomberg has learned that Apple exported nearly $6 billion of iPhones made in India, an increase of about a third from a year earlier. The tech giant is expanding its manufacturing network in India as part of an effort to lessen its reliance on China. Coming up, Keir Starmer's big budget. We're going to preview tomorrow's fiscal statements from the UK government. That is next. This is Bloomberg. Welcome back. UK Prime Minister Keir Starmer says the government will embrace the harsh light of fiscal reality. This as his Chancellor, Rachel Reeves, prepares to reveal a package of tax hikes and extra borrowing in tomorrow's long-awaited budget. Joining me now is Managing Partner at Connection Capital, Claire Madden. Claire, good morning. Thank you for joining us. You work in the private equity space. You help to connect high net worth individuals and family businesses in terms of family wealth units, I should say, with the world of private equity and small and medium-sized enterprises that need that funding. What are your clients, what are the people that you have a touch point on saying about their concerns or maybe their expectations about this budget?
Well, if we look at the importance of SMEs to the UK economy, they represent over 90% of corporates in the UK. They employ over 60% of the employment, and also they provide and generate 25% of UK GDP. So a very, very important part of the economy. Now, those owner-managed businesses often have a dilemma. They can reinvest the profits that they make in their business or take on debt or raise equity to grow and build capital value in those business, increase tax receipts, and also increase employment. But the value that's built within those businesses at the moment is taxed at a certain rate. If what the Chancellor is going to do is to increase CGT, then those owner-managed businesses have a choice. And many of them are saying, well, why take the risk? Why not just sit and just carry on trading as we are at the moment, not grow, not take on new employees, but actually just then pay ourselves dividends out of the company rather than grow.
And to be clear, for our non-UK audience, CGT, capital gains tax, and the expectation that that will be reformed. Claire, do you at least concede that the capital gains tax structure in the UK does need to be reformed?
No, I don't. For the specific area that I'm talking about, it's very important to keep that economic stimulus and that motivation for entrepreneurs and wealth creators going. There may be an argument for sort of buying an asset and sitting on it, and it just, grows in value with the market. You're not really creating anything. But there are lots of things that can be done with the CGT rate and the regime to help address that. What I hope the Chancellor doesn't do is just a wide-ranging reform where it's throwing the baby out with the bathwater.
What is the level of concern? You've outlined what could come about if there is an increase in this capital gains tax for some of your clients. What is the level of concern right now when you're speaking to them?
Well, it's uncertainty. So, certainly in the run-up to the budget, there's been a huge run-up, far too long. It's just created uncertainty within the business community. No one really knows what to do and are holding off making kind of longer-term decisions. But certainly if there is an equalisation with income tax rates, then I fear that investment will really fall off in that SME part of the marketplace. We also represent investors investing in private companies. And again, their concern is actually if I'm going to take the risk in something that is an illiquid investment, then I want the commensurate return, which is going to be different from just taking income.
Yeah. How big a hole is the private equity industry filling when it comes to that need for funding for SMEs in the UK right now?
It's huge. We got one of the most sophisticated. It's a real sort of beacon within the UK in terms of our private equity industry. Private equity-backed businesses again generate 6% of GDP in the UK. So it's a huge part, and it's an industry that should be sort of encouraged and nurtured.
How are your clients more broadly thinking about UK assets? We've seen US private equity quite active. There's the valuation opportunity that some would draw a line under when it comes to UK assets. We've seen buyouts kind of picking up on that front. What is the appetite right now for UK assets more broadly?
I think in the right circumstances, there is a big appetite for UK assets. We're seen as, certainly at the moment, we'll see after tomorrow, but a business-friendly environment. The governance regime is good. There's lots of innovation. We've got a great sort of tech and venture industry as well. So there's a lot to like about the UK industry. As I say, I just hope that we, don't send out the signals tomorrow that we're not open for business.
Claire, when it comes to the interest rate environment, higher rates, the Bank of England is gradually moving those rates lower. How much distress are you seeing across your portfolio? Are you starting to see some of your businesses that you invest in struggling on the funding front and the pressure of these higher rates starting to take a toll?
Our portfolio is relatively okay because we operate at the lower end of the market. So actually, we don't put a lot of gearing into our businesses. I would say sort of in the mid and larger market, sort of private equity-backed businesses, there is some stress, but actually I think lots of lenders, whether they're actually traditional banks or private credit funds, have worked in partnership with their businesses and private equity backers within those businesses to sort of help them through a bumpy period. So everyone's going to be relieved when rates start to come down. It does mean that sort of deal making and M&A starts to come back. So I think everyone will be glad to see that happen, including business owners that have some debt.
OK. Claire Madden, thank you very much indeed. Managing Partner at Connection Capital on a view around capital gains tax and the likely changes when it comes through. With the budget, of course, that we are going to be reporting in detail for you tomorrow. Our special coverage of the UK budget tomorrow from 12:30 p.m. London time. A huge moment, of course, for the UK and any investor with exposure, of course, to this country. Checking HSBC right now, some new lines crossing from the relatively newly appointed CEO. It's a beat, of course, in terms of the earnings, a $3 billion buyback as well. George El-Hedary, the CEO, talking about the planned, or at least some speculation there was a plan to split up the bank. He's pushing back against that. The HSBC CEO saying that there is no plan to split up HSBC. He says the restructuring will lead to net cost savings. So some comments coming through from George El-Hedary, the relatively newly appointed CEO at HSBC, on a media conference call on the back of the beat that came through from HSBC's earnings. Now, back to that panel that's taking place in Riyadh. At least a number of big names speaking at that summit in the Saudi capital, including BlackRock's Larry Fink, Citadel's Ken Griffin, Blackstone's Steve Schwartzman. None of those people you can see in vision right now, but this panel is taking place. They're around the table there in Riyadh at that Future Investment Summit in the Saudi capital. I think we're going to listen in for a minute or so. Let's dip into this conversation.
Companies are big investors in new sectors that were not in existence in Saudi Arabia. So we've been investing for the past 8 or 9 years. And now most of our projects are getting operational and commercial. And people are seeing the difference between what's their perception of Saudi Arabia back in 2015 and before that and what it is right now. The Saudi economy is one of the fastest growing economies in the world. I think in 2022,
if we get a sweep, either the Democrats or the Republicans, the bond market will conclude that nothing will stop either party from spending a lot, maybe cutting taxes a lot for some folks, not for others. And all in all, continuing to widen the deficit and the debt. Meanwhile, the interest payments continue to accumulate and will probably hit $1 trillion.
Wall Street veteran Ed Yardeni there on expectations that deficit in the US will continue to expand. Here's a look at the interest payments right now for the US government on that debt pile, approaching $900 billion US. Yes, you are not far off from $1 trillion just on interest rate payments. And to be clear, whoever is in the White House come January of 2025, whether it's Harris or Trump, the expectation is that that expansion will continue in terms of the debt load, with a view that Trump's expansionary policy, the policies he's outlined and talked about, would be even more expansionary, push up the debt load even more. But both candidates, you'd see a tick up in the debt load. That's the expectation from most, at least. It's just worth bearing in mind. Let's flip the board and have a look at a very different story. Alphabet reporting later today. Will this be the catalyst for the markets? Expectations that you're going to see a growth in revenue and profits. A focus, of course, on the cloud unit. Any commentary in terms of that AI spend and the monetization story? The stock is up about 20% year to date. That is the big one in terms of the earnings story. The opening trade is up next. This is Bloomberg.